As we step into 2024, despite the chill in the air, India's startup founders have weathered a rather long and challenging winter. The past year proved to be tough, with the venture capital pipeline freezing over and startup funding reaching a 7-year low. Startups did manage to raise about $8.5 billion, though, a fifth of the record high seen in 2021, as per data from Traction. However, amidst these challenges, there is a silver lining. Startups showcased remarkable resilience, reflecting the determination of founders who prioritized strengthening fundamentals over the pursuit of growth at any cost. Many hunkered down, rectifying anomalies in their businesses and displaying an unparalleled commitment to survival, and this shift in mindset bodes well for the future. Looking ahead, there is positive anticipation of a rebound in venture capital investment. While not expected to reach the dizzying heights of 2021, which may not be a bad thing, investors are likely to approach opportunities with stricter due diligence and a greater emphasis on corporate governance. Well, the emphasis on building sustainable businesses aligns with a more prudent and responsible approach, adding to the positive outlook. Mamaearth's Diwali listing brought cheer, and the expectation is high for more founders to make their mark on Dalal Street. Swiggy, Oyo, Ola are some notable names that are likely to follow suit, bringing a renewed sense of optimism to the startup landscape. In essence, the startup ecosystem, despite facing challenges, is resilient, adaptive and poised for positive growth in 2024. Hello and welcome. You're watching Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen, Bhan, and here's wishing our Young Turks community, all the startups in India and globally, a very happy new year. Joining me on the program, Mridul, Arora, partner at Elevation Capital; Ashvin, Chadha, managing partner and co-founder of Anicut Capital; and Vaibhav, Domkundwar, CEO of Better Capital. Gentlemen, thanks very much for joining us, and a very happy new year to each one of you. Let me start by talking to you about what the year ahead is looking like. I listed out a whole host of challenges that we've seen through 2023. The hope is that perhaps spring is around the corner. Mridul, let me start by talking to you about that. Do you see green shoots at this point in time, and where, more importantly, do you see them?
Thank you, Shereen, for having me, and very happy new year to you and all your viewers. Look, as you rightly said, 2023 has been a fairly remarkable year. We've seen companies across sectors and stages focus on high-quality execution, really bringing back the focus on controlling costs, scaling revenues, and therefore leading to a path of sustainable profitability. We think that trend is pretty much set in motion now and will likely continue. It's very heartening to see that, even in 2023, almost 40% of Indian unicorns are profitable. And we think in, a short period of 12 to 18 months, we'll have at least 15 to 20 more turning profitable. So I feel one thing we definitely feel will happen in 24 is the continued focus and importance of profitability and unit economics. In fact, we just surveyed almost 250 founders across India, where 18% of the founders stated they're profitable and 58% aspire to reach it in medium term. In terms of focus areas, look, we think India still continues to be a fairly early stage, fairly ripe market for early stage ideas. We're very, very excited about both the founders and ideas we see. For Elevation, at least, our focus remains on a number of core sectors that have always remained true to us for the last 20 years, which is consumer tech, consumer brands, fintech, financial services, and SaaS. But additionally, we have seen both in 23 and continue to invest a fair amount of time on a few emerging areas like climate tech, space tech, gaming, and creator economy.
Okay, so those are the emerging sectors that you're going to be betting on through 2024. But, let me get Vaibhav into the conversation. Vaibhav, many thanks for joining us, and Happy New Year to you. You've been reflecting on the year gone by, and the core theme in your words has really been don't die. Now, if you were to reflect on the key lessons and the key learnings from the past year that you intend to take forward as far as your portfolio companies are concerned this year, what would those be? And, we keep talking about startups, but it hasn't been an easy year for VCs either. What's been the big angst on the VC front, on the fund front?
Absolutely. Thanks, Shereen, for having us. A Happy New Year to you and your viewers as well. And look, I think 2023 was a hard year. We spoke, I think, in the end of 2022, and I think we had just begun what was going to be a really tough trek of 18 months or so it's been now for companies to essentially ask themselves why they're building what they're building. Because I think the speculative funding had essentially come to a harsh halt, and founders were forced to essentially think about what is the company that they're building, whose problems are they solving, do they have it in them to essentially build this for the next 10 years or something like that, right? And I think that's the work that we primarily did going into 2023, where I think first we underwrote our thesis along with the founders on why that company should exist, and do we really believe we can build this company irrespective of the funding cycle, right? And I think those were there were a lot of hard calls in terms of how do we realign the companies to build, towards profitability. And again, I want to be very cognizant of the fact that profitability alone is not really what venture looks for. Venture looks for profitable growth and a profitable high growth, right? Which means 2023 was essentially about saying, can we build profitable growth at these companies? So we arrived at that conclusion at a vast number of our companies, and then realigned everything according to that, right? So I think it was a tough year, but I think, like you mentioned in the beginning, a good number of companies have made that transition. It was a blessing in disguise that many of us thought it would be, and we're coming out strong. Going into 2024, I think internally for us, we achieved the don't die thing across the vast majority of our companies, and 2024 is going to be, in my opinion, really about taking control of our destiny. Right? We don't know if the funding environment is going to improve or not, but we know that we have a business that we can build. And what we call as, are we at a situation where it's now just a matter of time, right? So that's what we're aiming for. We're looking to take, our destiny in our control. And lastly, to your question about how hard has it been for venture investors, I think it's been incredibly hard, right? I mean, we are not the builders, right? We're just supporters. But at the same time, it's just really hard to kind of go through this as a true partner. And but I think we are coming out strong.
Yeah. So Ashwin, let me address the issue. I mean, don't die was the core theme, was what we just heard there from Vaibhav. But the point is, we don't want to have a graveyard of zombie companies. We want these companies to actually grow and thrive. So as you look at 2024, you talk about the Rahul Dravid approach to investing. I want to understand from you, many of you are looking at the same spaces in terms of the bets that you intend to make. How are you going to approach companies and your investing philosophy differently in light of the experiences of 2023?
Well, thanks for having us on. This is very looking for us.
I think we have an audio problem there. We will try and reconnect with you, Ashwin, in just a second. But let me get Mridul back into the conversation. And Mridul, just to put that point across to you, we don't want, as I said, a plethora of zombie companies that are just middling along. We want these companies to thrive, and that potentially is the hope at this point in time. What are you going to do differently? And more importantly, some of the big challenges that 2023 threw up across a whole host of, many of your portfolio companies as well, corporate governance, financial impropriety, misreporting, and so on and so forth. Do you believe that that is going to be a big focus area for you in the year ahead, to look at that issue?
Yeah, look, Shereen, I think corporate governance has always been a paramount area of focus for us. It's, in a growing sector and a growing new age sector, you're bound to find a few anomalies and a few discrepancies. But I feel by and large, the startup sector and by and large, the startups that we see around, the corporate governance is of fairly high standard. And even as a fund, we are fairly focused with a very robust sort of portfolio support functions, fairly robust corporate governance. I think that importance has always been there, and that will continue to be of importance. To Vaibhav's point, look, a lot of effort over 22 and 23 has been around people really finding whether they really have a product market fit, fixing their unit economics, really building back to finding a sustainable path to profitability. I think today, as we stand, we are at a very interesting point where, for a number of founders and companies that we see, they've reoriented their business model, they've reoriented their cost structures, and they're finding growth back. And India as a market, if you really step back and think of the macro picture on India, really everything, whether it's the domestic consumption, whether it's export and therefore export-linked sectors for India, whether it's organization of supply chains, whether it's people coming digital first, whether it's our public infrastructure, everything we feel like is in a great place for a medium to long-term story to be fairly robust. And therefore, our focus is now, as long as there is product market fit, as long as unit economics are figured out, really to double down on growth. It's really hard for anyone to call when will the funding cycle come back to the levels of 21, and maybe it will not come back for some years. But the right founders, the right ideas, and the right business models, really, we have not seen them having any dearth of capital. For the right set of ideas, there is a right amount of capital, right kind of capital available.
Yeah. And we saw that playing out, at least especially at the seed stage, perhaps not as much at the growth stage, but certainly plenty of activity and positive activity at the seed stage. Vaibhav, let me come to you now. And, just to pick up on what we heard there from Mridul on the bets and the themes that are expected to play out. And you have a somewhat contrarian view because you believe that we're not seeing, and I'm quoting you, any dramatically large new white space that are left in the building for India bucket. So you expect that it's going to be a slower 2024 for India market-focused bets, and it's pretty much the same sort of theme when you talk about SaaS or you talk about consumer tech as well. So somewhat contrarian view, Vaibhav. Take us through why you believe that to be the case.
Yeah, so I think, Shereen, our view is that over the last 4 years, we've had a very large number of teams that essentially built a number of ideas in fintech, edtech, and consumer tech in India as well. A lot of those essentially are in play right now, and we are learning what is working and what is not working, right? And remember, we are coming out of a 3 or 4 year period where we actually attracted more capital than we ever have in the history of Indian venture capital, right? So I think the view around not having major white spaces in India in 2024 is really driven by the fact that we already have a whole bunch of plays in action, and we're learning from that, and we will sort of reinvest in those sectors after we know what's working and what's not working, right? That's one part. The second part is, I think, if you look at just consumer, keeping aside consumer brands, let's just talk about consumer tech. I think, we've spent billions of dollars over the last several years to understand what's not working. Right? And I think the what's not working list is honestly larger than the what's working list. And we will require a very different view to unlock what's going to work. We actually have a company where, believe it or not, India users, in fact, Bharat users, are paying for software to the tune of this company making several crores a month in pure software sales, right? Which is as high margin as it gets. Now, that is something that none of us would have believed several years ago. So I think there's a lot of work to be done to unlock what is going to work in India, right? And I think that's what we think about consumer tech. Having said that, if you look at climate, agri, and several other sectors, there's a lot to build in India. There are a lot of problems being solved. There are a number of companies that we're seeing are doing very well. So I think it's really the over-invested fintech and edtech segments, which I think we'll have to wait and watch.
One thing that's not working, at least on the show this evening, are the phone lines. So, Ashvin, we have you on the phone now. Thanks very much for your patience. Let's dig a little deeper, Ashvin, into what the investing philosophy is going to be for the year ahead as far as you're concerned, and build on the consumer theme that we were just discussing. You've got a portfolio which has the companies and the brands that are actually doing something right, that are working, whether it's Bira or Blue Tokai or Epigame or Sugar. So, add to that list of what Vaibhav was saying, what is working, what is gaining currency, what is monetizable at this point in time, and the thesis that you intend to build on.
Thanks, Shereen, first of all, for having us, and Happy New Year. we do right from seed to, private credit, larger companies. So we get to see lots of different stages of funding. So 2024, in my view, is going to be a year of exits. In the last 10, 12 years, we've seen tremendous amount of capital that has been raised for Indian startups. A lot of that will now start to see exits. We've already seen public markets doing phenomenally well over the last year. They've taught us a lot of discipline, which we all frankly missed out in 2020 and 21. I think exits are going to be very key, and I also see the rise of domestic capital coming in much more significantly in the year 2024. So those are the two key themes for us at Anicut.
Okay, you said that exits will be a large part of the theme of 2024, and we do have a pipeline of IPOs, including big ones like Ola, etc. But I want to press upon a point that we were just discussing with both Mridul as well as Vaibhav, and address the issue of why global VCs seem to be finding it harder to operate in India. What's your view on that?
This year we've seen some global VCs exit India, which is unfortunate. But at the same time, I think this is a cycle which will keep on happening. If you just look at how many domestic VCs are incorporating here, we've seen the government really push GIFT City. So a lot of capital is coming into India. It may be with different fund managers, independent fund managers. So I see a lot of domestic fund managers take, the role of shepherding the capital into India. It could be domestically sourced or from foreign. So I don't see an issue. I think the year 10, 15 years ago, we had a lot of capital coming in from overseas, which was parachuting into India. I think those days are gone. We have, tremendous fund managers here domestically that have done well. So I see more and more of that, being a theme for this year, both local capital and domestic fund managers.
Right. Mridul, speaking of exits as well as the IPO pipeline, you've got a bunch of portfolio companies that are in the pipeline, whether it's First Cry or Swiggy. In fact, we've just got an upgrade coming in from Invesco as far as Swiggy is concerned. Where do you see valuations in 2024? The froth has corrected significantly, but do you believe that we're yet to see the bottom as far as valuations are concerned and more correction perhaps through 2024?
Yeah, look, Shereen, capital markets are always very hard to predict, especially in the short term. Overall, fundamentally, the companies you see today, especially the ones which are going for IPO, you see them in a much, much better shape than you saw them 2-3 years back. First Cry, Swiggy, Urban Company, Ixigo, bunch of our portfolio companies lining up for an IPO. All of them have scaled, continued to grow. All of them have become more efficient. 3 years back, if I would have asked any one of you to guess how many listed tech companies would be in India, I don't think we would have come anywhere close to the number we see today. So from a next 2 to 3 to 5 years perspective, we think a number of tech companies in India will go IPO and will go IPO in India, just given
what would your best guess be on the number of IPOs that we could see in 2024 go through?
24, look, it's hard to say 24, but if you have to put me at a spot, I would say 5 to 10 at least. But I would say in next 3 to 5 years, we should have anywhere between 35 to 40 listed tech companies from India, listed in India. And that, I think, is something we should definitely aspire for.
Okay, 5 to 10 perhaps in 2024, and then significantly higher in the medium term. Vaibhav, let me address that issue with you. The valuation mismatch that we saw, more sort of saner valuations through 2023. What does 2024 look like on that front, and especially when we talk about regaining and rebuilding the trust that perhaps was lost with some of the initial tech IPOs that we saw and the lessons from there?
I think what we're seeing is the correction in how to build businesses has happened at scale in India in 2023, right? And that is, I think, at the center of sort of the shift that we have to put in perspective. Remember, I think the money that came in and speculated and didn't get what it speculated on may have gone, but we actually have produced companies now that will essentially produce, like Mridul said, IPO-ready companies over the next several years, right? So I think the valuations will essentially adjust over a period of time. I don't think as investors, venture investors, we take valuations very seriously when they are super high or super low. I think we really have to focus on the quality of businesses that we're building. And I think we're seeing across sectors several growth stage companies across climate, fintech, SaaS and others, where you can see high quality companies being built. And they will be sort of the role models for many others that we are funding at the founding stages, right? So I think we should be fine. I can't predict on the number of IPOs because we are really at the founding stage. We're sort of building for the Mriduls of the world. But I think we are in a very strong position, and I think valuations will catch up to the right number more than anything else.
You know, yeah, since we're talking valuations, let me try and elicit, I know something that captures headlines always, you know, the unicorn drought that everyone has been talking about through 2023. Do you anticipate the drought ending, Vaibhav? I'll start with you and then get Ashvin and Mridul on as well.
Tough to say. Let's say that unicorn-worthy companies will be many new ones in 2024. I can see that from the execution that we're seeing across many of our companies. Whether they will go out and raise to sort of get to that valuation is really a function of what they think is right for their companies. So I think we really have to, you know, I've written about the unicorn ambition, a post long back, and I think it's really an outcome. It's a tag that somebody else gives you, right? I think we really have to build companies that are unicorn and decacorn worthy, and I think we are very well on path to it. I think the funding environment will essentially define whether companies do go out and raise capital to cross that mark.
Ashvin, you know, your thoughts on the current unicorn drought, and more importantly, what would be, to your mind, your most interesting bets? You could talk about a sector, or you could even talk about companies for 2024.
Shereen, we have probably 4 or 5 companies that we think can go public in the next 2 to 3 years. Companies like Wow Momo, Bira, Ayurveda Experience, Milky Mist, and others. But you know, for us, the real number is, can these companies go from 50, 100 crores profit pools a year to 500,000 crores? I think that to me is a bigger validation than having a unicorn tag. If somebody is doing 1,000 crore profit, then that's a very special company, and that company has been built to withstand many storms over years. So the profit pools are something that we're focusing on much more than valuations, because valuations, as can move up and down quite honestly with cycles.
Yes, we have seen that play itself out. Mridul, I'll give you the final say, the most interesting investment bet that you're going to be watching out for in 2024.
Look, I again, as I said, as everyone said, I agree, right? I think revenue pools and profit pools are really the right monitorables. I would say all the known areas are very well known, but I would say space tech as a sector is something we feel very, very excited about as sort of an emerging space, in a space where as a fund we are spending enough time, effort and resources to build our knowledge and capability in. We feel like India has finally proven its prowess over many years on being able to design, deliver low-cost, high-quality outcomes. And that's one area I would say is one very big area of focus for us, and a big area of watching out for us, which could break out in 24. And we would definitely be watching it very, very closely.
Well, we've already seen our moonshot moment, quite literally, with the Chandrayaan, and we've of course also seen the emergence of private space tech companies, including one that is now listed on the Indian bourses, and perhaps, as Mridul points out, that is going to be the big bet. And I know that Ashvin and Vaibhav are betting on space tech as well, so that could be one of the big themes playing out through the course of 2024, along with exits and hopefully robust IPOs. Mridul, Ashvin and Vaibhav, many, many thanks for joining us on the first edition of Young Turks for 2024. Appreciate your insights as well as your outlook for the year ahead. We are going to take a break here on the program. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.